What would happen to euro-denominated bonds if the Eurozone breaks up? Last month, the Mura advised investors to check the terms of their debt holdings, the crucial factor, whether the bonds were issued under English law or local law. For example, bonds issued under Greek law would likely convert into a new local currency, spelling potential losses for the investors left holding them. Our next guest says investors should use this information as the basis of a new strategy. Paul Day, Chief Strategist at Market Securities, is here. Hi, Paul.
Morning.
Firstly, you think there's pretty high possibility of a breakup of the Eurozone?
I think there's a bigger possibility than many people are looking at the moment. There seems to be an assumption in the market that there will be some tipping point where the Bundesbank will relent, where the ECB will relent, and we will have Euro bonds, we will have debt monetisation across.
You don't think that'll happen?
Well, I think there is a chance, but I think that the chance of that happening is probably less than the market feels that it's going to happen. I think Germany is very much looks back to two periods of hyperinflation, looks back to Hitler's regime where he said that that any statutes they have are merely just pieces of paper that can be torn up, and they're very concerned about going down that path again, about doing things for a short-term economic fix and tearing up treaties. So it would not surprise me if they continue with this plan. Everybody knows what could be done to help solve the situation, and we've had summit after summit after summit where that hasn't happened yet.
Let's talk about the matter of redenomination. Before we look at how we might be able to make money out of this, legal matters are what's important when it comes to this, isn't it?
Yeah, I mean, I'm no lawyer.
Of course.
But when we look at there are three things really to look at. You need to look at the law governing to the debt instrument. Also to look at, if we were to break apart, whether the countries that leave the single currency, whether that's something that's been agreed by many parties or it's something that they've done illegally. So they've just said, right, we're leaving the euro. That will have ramifications in the courts. And also we need to look at how widespread a euro breakup is. We could see one or two peripheral countries fall out the bottom of the net and the euro continues with less than 17 countries. Or we could see a situation where the whole thing blows apart. And then we'll have a reintroduction of maybe a new ECU, and the euro itself cease to exist. So every instrument will probably need to be redenominated somehow.
But ultimately you want to invest in instruments then that are governed by English law. Is that correct?
Well, again, it is a very tricky situation. When we look at sovereign bonds, if a country leaves by their own volition and it's not perceived to be allowable in court, anything that's still under English law, one would imagine, would still be denominated in euros, whilst the domestic governed bonds would be then probably be redenominated in whatever the new currency is.
Is there an arbitrage possibility here?
Well, yeah, absolutely. But the difficulty is when we look at the sovereign bond space is that there are very few sovereign bonds that are actually issued under English law. The majority of bonds are issued under a domestic law. So there isn't a huge stock of bonds for people to get their teeth into if they want to play their arbitrage. One thing that would be quite interesting, particularly if you look at a full-scale breakup of the euro and the reintroduction of something like an ECU, there's going to be a big currency play there. So on both sides, whether it be the periphery where we expect the currencies to weaken dramatically, in that instance, you probably will be wanting to hold the corporate debt of high-grade corporates, because they would more than likely stay, the English law bonds, stay in a euro or an ECU framework, where their equities would be redenominated in the new currency. So there could be a big play there. On the flip side, if you look at Germany, the German corporates would be much more interested in keeping their debt denominated in whatever the new ECU is, because the Deutschmark would appreciate markedly. So the equities for corporates in Germany will be redenominated in the new Deutschmark on their local exchanges. They should outperform the debt instruments. So when you look at the core countries, you probably be wanting to invest in equity rather than debt for corporates, and the flip side for the periphery.
Paul, thanks for joining us today. Paul Day, their Chief Strategist at Market Securities.